In this video, I will tell you about a great and awesome strategy with unique settings that you can easily trade with and get awesome results with. It provides us with the most accurate buying and selling signals, and every trader needs to know this strategy. So stay with us until the end. Don't forget to like and subscribe. Alright, we set the time frame to 5 minutes and I'll give you this tutorial on the GBP USD chart. To add the first indicator to the chart, I open the Indicators tab and type in CCI. This CCI is one of the most popular default indicators. It's available on most platforms and has a lot of fans. After opening this tool on our chart, we need to change some of its settings, so we go into the settings of this indicator. We enter the Input tab and change the length from 20 to 50, leaving the other settings of this tool as they are. Next, we will enter the Style tab where we will deactivate the upper band by option. We scroll down and disable the lower band option. In the same way, we leave the midline as it is, and the number is default, so we don't need to change it. Here, we click and select the line option. After doing this, we also change its color. We click on the Colors section, and here I choose the white color. I also increase the opacity and thickness so that the inside of the image is easier to see. And finally, I deactivate the checkbox for the background. We can also increase the thickness of the CCI. After we apply these changes, we click on OK. To complete this strategy, we need a second indicator but so far, this is the video that you have been with us for. If you haven't subscribed yet, hit the subscribe button, and by activating the bell, you can be a part of our next videos because we will have super funny videos, and from the playlist section, you can check out some amazing tutorials, based on your needs. Alright, let's open the Indicators tab and type EMA in the search bar. You see, friends, we don't need the exponential moving average, so we scroll down. And here we need the crossover, so we click on it to add it to our chart. This indicator, we open the Indicator tab and simply and easily type EMA in the search bar. Look, friends, we don't need the exponential moving average, so we scroll down. And here we need the crossover, so we click on it to open it on our chart, which was created by someone named H. Patter. After this tool opens on our chart, we need to make some changes. So we go into the settings bar of this tool and enter the Input tab. Here we change the length of the EMA, which is currently set to 10 to 34, and we also change the second length to 50. Enter the fever. Let's style it. Here we'll disable the color bar checkbox so that we can see our main candles. After we do this, we'll scroll down, and here we'll increase the opacity of the one that's red. Now I'll change this color to white and increase its thickness in the same way. This is optional. The selected colors are also permanent. So I'm going to change this to yellow and increase its opacity and its thickness. So after we've done that, we're going to click OK. This is the indicator view and what we're going to work with and what we're going to learn. Now that we have added both indicators to our chart and applied the changes to the method, it is visually clear what we are going to do. And how does this strategy work? Now we will explain further. In this strategy, we sometimes get signals that if the price is above the EMA we are in a profitable trend. And if the price is below the EMA, we are in a downtrend. Also, if the price is above the EMA, we are in a downtrend. If the EMA is forming and we have weak candles and a ranging market, we absolutely do not trade during these times and completely ignore the signals we receive. The EMA that we changed to white is set to 34 and the yellow one is set to 50. We can use this line. We change the yellow color to the number 50, 100, or 200 so that we can understand the overall trend of the market. Also, if our candles are above this white EMA line, we need to pay attention to the overall market trend, which should also be bullish to confirm this trend. If that happens, as indicated by the yellow line, we then look at the CCI. When the signal is formed above our travel line or zero line, we are in a bullish trend, and if the signal is below the zero line or travel range, we are in a bullish trend. After the EMA signal is formed, we look at the CCI, which must be above the zero range for buy trades. After the candle closes, we can enter the trade. And it is the same for new trends. In our opinion, this strategy works well and can be used on other time frames, and the higher the time frame, the more reliable the signals that are generated. Also, the average risk to enter this strategy will be 1 to 1 and 1/2 to 3, and you can also wait based on the conditions and taking into account all aspects for one of the X signals to be issued for us and then exit the transaction. When the desired tips are reached, we should exit the trades. This completely depends on your strategy and actions. We said that these parts that have a range mode, we completely ignore these signals. See our CC1s too. It's forming on this line, and this range condition clearly indicates that we should completely ignore any trades or signals that are generated. They won't matter to us at all. We are looking at the GBP USD symbol and have set the time frame to 5 minutes. This strategy will also be applicable across other time frames and is effective on all symbols that have high liquidity. So, like and subscribe, and let's move on to the rest of the video. Let's start with the first method. We open the Indicators tab and type QTrend in the search bar. Look friends, we first need this QTrend indicator. So we click on the method to open it on our chart. After opening it on the chart, we see that it consists of buy and sell labels and has a moving mode in which it moves with the price. And this indicator also changes color with changes in trend or price corrections. Green is for Saudi transactions and trends, and red is for downward trends or corrections. It even detects noise and pullbacks as a trend change. Using the second indicator, these errors are much less. Now, we will enter the settings of this indicator. We will enter the medicine of this put. In the Input tab, we have the trend and ATR settings, which we will leave as default. We scroll down, and here, the period is set to 3, so we change it to 9. After doing this, we click on the next option, which is also set to 9, and change it to 1. After we have applied these changes, we will enter the Style tab. and deactivate the buy signal option tick. And we will do the same with the other ticks that you see in the image. Then we scroll down further, and here we also disable the bar color option so that we can see our main candles. After we make these changes, we click on OK. We also use a second indicator for more information and more accurate signals. But before introducing it, please support our channel by liking and subscribing. Alright, we open the Indicators tab and type BX Trend, THEM, in the search bar. You see, friends, we need this. For the first indicator, we need to click on BX Trend. After it opens, we see on the chart that this tool consists of several lines and histograms that are moving above and below the central line. This central line is known as the zero line. Now, depending on the increase or decrease in price, we will see a color change between green and red. Additionally, there are several circles in red and green, where the red circle indicates sell signals, or sell, in this indicator for us, and the green color forms buy signals for us. The lines and histograms that are actually placed behind the BX Trend indicator help us a lot in identifying trends. If the histogram is above 0 and green, it indicates bullish trades for us. And it is an upward trend. When this line and the histograms are formed below the zero line, it indicates a downward trend and movement for us. These histograms also help us know when the trend is weakening. For example, here it shows that we are in a downward trend, while our histogram is red. And when you see this line, friends, when it comes here and forms in green, it shows that our downward trend is weakening. Now it could be a pullback, or it could indicate that we will have a reversal and trend inversion later on. Also, the distance of these histograms to the central line, U, shows us the strength of the trend. When the distance is very large, our trend will also be stronger, and when it gradually or suddenly shortens and gets closer to the central line, we observe weakness in the trend. Similarly, when our histograms are above the zero line and are green, when they turn red, you can see, friends, like in these areas, it shows us the weakness in the upward trend, which could be a pullback or a reversal. Also, note that the histograms themselves. This means they can be light green or dark green, and we can have a color change between these two. We also observe a type of MACD histogram in this indicator, when the histogram is above the zero line. It indicates an upward movement, and when it is below the zero line, it indicates downward movements. When it is above zero and the bars are increasing. Therefore, when we pay attention to the histograms of this indicator, we can easily interpret market trends. Now, how can we use this strategy? Well, when our histograms are red, they indicate that we are in a downward trend. Now you should pay attention to these red circles that form, or the green circles. If you remember, we previously mentioned these green and red circles. So, when it comes to the circles, When the circles are green, we are in an upward trend, yay, and we do not pay attention to these greens. Look at these parts, for example. And whenever we receive a sell signal, it will be valid for us in a downward trend. In a downward trend, we do not pay any attention to these green circles. And the first indicator must also confirm these signals. Conversely, there is also a time for upward trends. When we are in an uptrend, like in these situations or other places, where we have an uptrend and the indicator shows them. When red circles form in an uptrend, we completely ignore these red circles in the parts where the uptrend is shown. The red circles indicate a decline which may occur due to price corrections or events happening on the chart, cause these signals to be issued, and not all of these signals will be valid. When all the bullish indicators are issued for us, that's when we can trust these signals. Otherwise, we ignore the rest of the signals. You should also consider the first indicator to confirm the desired trend.